All right, mic check, Mr. Green here. Howdy. All right, getting started up. I was just about 30 seconds late. All right, Mr. Green here from TradePhantoms. Give me a yes in the chat box if you guys can hear me and see my screen. Make sure that we're good to go. Come on. Yes in the chat box if you can hear me and see my screen. I want to make sure I'm up. I don't see anybody responding. I see 11 people in here. All right, there we go. Okay. Good afternoon or morning, wherever you are. I'm Mr. Green from TradePhantoms. I am the FX guy, so that's what we're going to do. I'm going to give you a sneak peek of trading like a professional with institutional order flow live in real time. Hey, AJ. We're going to use actual trading pairs, currency pairs, which are technically cross pairs, but don't worry about that too much. And we're going to look for some setups. You know, what we want to do is if we can, I'm going to look for some setups and you guys are going to watch me. Basically, what I'm going to do is I'm going to get on my watch list here. I'm going to start down on New Zealand Swiss. I'm going to show you basically how a professional trades. A professional trades by following big banks and institutions. A professional trades by buying and selling when banks and institutions are buying. And a professional does that by reading charts, okay? So now chart reading takes some time. Of course it does, right? But I'm gonna give you some analysis here as we go along. All right. So, and then I'll tell you a little bit about TradePhantoms Pro and all that good old stuff. All right. So, basically, whenever you're charting, okay, you start top down. It's called top down analysis, right? So the top chart is monthly. So something very common that pros do monthly, weekly, daily. They evaluate those three charts. Okay. And if you have a buying opportunity or a selling opportunity in a position where you think a bank or an institution is going to get in, right? A higher probability, not a guarantee. Then you start drilling down, right? You start going to 8-hour charts, 4-hour charts, 1-hour charts, etc. Give me a yes if that makes sense to everybody. So there is something that I would look at on my higher time frame. I'm going to see where I'm at as far as what I call my football field. Top of my football field is going to be up. Bottom is going to be below. Green's going to be in the middle. So right here on my football field, and I got a lot of people in here that are already TradePhantoms, and I got some people that are brand new to this, so that's cool. All right. The first thing I want to do is I want to evaluate, do I have a trend and where I am in my field? Okay. By definition, this is still a downtrend, but it is a really, really weak downtrend because the problem here, when you're evaluating trend is you start up here, you got a huge higher high. Follow my mouse right here. You got a huge higher high up here. All right, then price breaks down, but this retracement's ugly. So this is just something. This is a key rule, right? Those of you in here that have read charts understand what I'm talking about right now. Those of you that haven't, it's okay. But what I'm gonna try to do is I'm gonna try to give a mixed medley for everybody. If you don't know what to do, if you're confused, do nothing. Give me a yes if that makes sense. So if I'm in the middle of the range and I have like a down sideways trend and I really don't know what to do, I'm good. I'm not touching it. On to the next one. New Zealand CAD. Okay. Now we're taught to buy low and sell high. In this range area right here, we're at the top of the range, right? So a lot of people, what they do is they see, oh, we got a massive uptrend, Mr. Green. Price is up. Look at that. It's just flowing up. But we don't want to buy high. Okay, we want to sell. These are areas we want to sell. Now, if you look over here, I'm going to indicate something. Now, just a heads up, we've missed this trade. That's okay. But I'm still going to teach. All right? Right here, this area that I'm leveling off on a daily level. So I have an uptrend. I'm high on my range, so I'm doing macro, intermediate, micro. Rally, follow my fingers where they are. Rally, base drop. Okay. Oh, let me fix the camera. Sorry about that. I didn't see. Okay, now you guys can see it. That right there, what happened? This is what happens. This is what, as the little people, we can tell. We can see. All right. Institutions short sold the hell out of this pair right here. Buyers took control in the market, and the price shot up on that green candle right there. Just follow my finger, all right? Then after that, price flipped direction. Then price kind of, for a day, kind of hung out. It went down a little bit, but it consolidated for a little bit, and then it shot down. What happens here is an imbalance is created, okay? In this certain area, an imbalance was created of short selling orders. Because when the banks went to short sell on this currency pair right here, not all their orders necessarily got filled, which left a large volume of unfilled orders. We like to call them IOF. We like to call them UFOs, unfilled orders. This is the institutional order flow. This is so this is a perfect example of IOF working, because come over here. Look at these wicks. Look at these wicks hitting this level and coming back down. Look at the first time this wick hit this level. Holy crap. Where were we then? We were late. What a move. All right? But now there's something called purity. It already whacked the level. Now people have different rules. Some people have rules on purity that it can test it a couple times. I don't. I need 100% purity. So we really missed the move on this level right here. Price came up, it hit this daily zone structure. Wow, and it took off. Look at that move. Give me a yes if you guys see that. This is a really, really good example of even taking a reversal on a short sell on institutional order flow. Okay? Now, I don't want to touch this. Now it's poking the bear, poking the bear, poking the bear. No good. So once again, no trade. But this is beginner's hour right now, so I'm teaching. I'm teaching, brother. Remember him and he got game. All right. This is once again Willison. I wouldn't. Well, see, so Tom, Willison's new. Tom, I wouldn't. Tom's right. You could. I wouldn't. Because I don't like that price is tested up here 3 times, that it's just sitting there. I wouldn't short there. Let me finish on that. If you wanted to short there, you would put your stop up at this. You would short. Current price is right there. You would short at this first red line. You would set a stop loss, because we always want to have risk management parameters, all right, in place, where this second red line is. You're not going to get a big R to R here, Wilson. That's my problem with this, okay? So on reversal trades, usually, like for example, on reversal trades, if I can get a 2-to-1, I'm good. But we want you to usually at least get a 3-to-1 on a risk to reward. Okay? Look at the first time price hit here. All right? That would have been your level. And that would have been your target. That's almost a 3-to-1. It is definitely at least a 2-to-1. Remember, this is a counter trend trade. I'm not super high or big on taking counter trend trades. So my point is you even have a worse short selling opportunity now because you're going counter trend, Wilson. Does that make sense? So the answer is no, I wouldn't short sell here. If you want to, you can, but I would tell you absolutely not to. Tom, do you get why I'm saying that now? I believe you do, but I just want to make sure you're on the same boat with me. We could have, but in my opinion, where I could be wrong, I believe we missed it. But you could take a crack. You could take a crack. Pound New Zealand, I don't see much opportunity here. What this means here, this is once again sideways, trend middle of the range, kind of crap. Don't know what to do, don't do nothing. So as you can see, I'm starting on my weekly chart. On my weekly chart, because now let's take a step back and let's have a teaching moment. Good traders always have their charts set up. You can see this Fibonacci. First off, I don't use any indicators. That Fibonacci is not an indicator. It's an indicator, but I don't use it as an indicator. I use it to help me with price action, okay? It just tells me where I'm at on my football field. That's all it does. It's not an indicator. The problem with indicators are okay if you use them as what we would call edge Yeah, Joe, I agree. And Joe, if you're going to take it with a small risk to reward. Is that you, Jose, or is that Joe? Because I see Frank. Is that Franco? Jared, in FX, yes. I believe so. In futures and options, what's up, Franco? In futures and options, no, because you're R to R, you're throwing the darts more instead of the water balloons. But yeah, Jared. Yes, absolutely. So so back to the technicals. We'll use technicals as odds enhancers, okay? But we're not going to use them as a grand poobah, okay? We're not going to use them as all right, it's do or die. We're going to use we're going to use institutional order flow, and that's what I'm doing first. Then if I want to add some fundamentals on, then if I want to add some technicals on, I can do it. All right? But I always want to wait on that first. Does that make sense to everybody? I want to make sure my stuff's good. So I'm not starting on the monthly each time because I've already set the monthly ranges up, which is what my range is. So I'm on the weekly. So once again, I found nothing. I'm going to go down again. Okay, pound CAD. Now, middle of the range, uptrend. You guys know my rules. Middle of the range, uptrend. I'm buying. Give me a yes if that makes sense. Middle of the range, uptrend, I'm buying. Now I'm going down to my lower time frame. Now, I don't want to get too advanced here, but this is near an institutional number that I don't really care for. That I don't feel that I'm not sure if it's going to get back down below. Typically, what I would say the level of interest is right here at 179. From a teaching perspective, I would say right here. All right, so I'm going to do a couple things because I know I got some people in here that are brand new, and there's some people that are advanced, or more advanced. So let me explain what I'm doing here. Let me go beginner first. Middle of the range, uptrend, I'm buying. Now, price is right there at that red candle. That's where market price is right there, okay? I'm not going to buy up at the top. That's what a fool would do. I'm going to wait for price to come back down. Now, the question is, so I'm buying a dip. Some of you have heard that before, right? I'm buying a dip. I'm going long. Where do I place that dip? Well, there's levels. And some of these levels score out better than other levels, okay? So right here, I see an area, and this is a zone structure, and we talk about this a lot on the Thursday night class, which after this pair, I will do, okay? There's a drop, a base, and a rally. Basically, what this is telling me is institutions bought extremely heavy in this position, but not all their orders necessarily got filled. So there's a large amount, there's a high probability, not a guarantee, of a large amount of unfilled buying orders down here at this level, okay? So what I'm going to do is I'm going to target this level. I'm going to put a limit order down here, and this limit order is going to have a stop, entry, and a target. Let me do the basic stuff first, Jared, just because this is YouTube and it's not a regular class. Don't worry about the unit yet. About that, about the position sizing. I promise I'll cover that afterwards. Let me go over the basics. So I'm going to place a limit order down here at 179. All right? And that limit order, that red line right there is going to be Jared, can you let me just go through the basic stuff first, man? And then I'll do it, cuz that's for this hour. That's what this is dedicated for. I will cover that question for you afterwards. So on a limit order here, I'm going to put a buy order, okay? I'm going to put a buy, and then I'm going to put a stop loss down here, and I'm going to have a target somewhere up here. I want price to come back down. I don't want to buy up here with all the retail traders and investors. I want to buy low, sell high, okay? That's what I want to do. All right, so I got a great institutional level right here set up. All right, now let me just do this because a couple of you have asked, and then Jared, I can get to the advanced stuff, okay? So for those of you that are already Trade Phantoms, cool, welcome aboard, welcome back. For those of you that are not, and you're interested about Trade Phantoms, we recommend you to come to our Thursday night complimentary workshop, which me personally, I will be teaching this Thursday. So if you go to www.tradephantoms.com, you just go in there, you click on the register here button, all right? When you click on the register here button, basically what it's going to do is it's going to show you, all right? You're just going to put your first name, your email, your phone number, all right? You'll get emailed the link. I actually reach out and text everybody or call them on their phone number. Register, and it's for 7 p.m. Eastern Standard Time on Thursday. This is what we're going to go over. We're going to talk about the strategy, but we're going to talk about more of the concepts, why these certain zone structures work better than support and resistance, all right? Because a lot of you guys out there use support and resistance where supply and demand is a much more higher probability. We're also going to talk about risk management because you're not going to be right on every trade. You're going to take losses. You're going to be wrong. I'm actually going to show you that realistically to break even, you only have to be right 25% of the time. And if you're right 30 or 40 or 50% of the time using a proper risk management strategy, you can knock it out the park, okay? You can do very, very well. That also means we're going to have to talk about multi-directional trading. We can't only rely on making money when the market goes up. We have to also give ourselves opportunities when the market goes down, which is called short selling, or even sideways markets in options and Forex, okay, using spreads and carry trades. Turning small accounts into larger accounts by using leverage, okay? Now, with that being said, two common fears: fear of not having enough money to get started, fear of, losing money. You lose that fear by setting up that bracket order, that limit order that I talked to you about. We go over that in the class. Most people don't know what the outcome of their trade or investment is before they get into it, and that's wrong. You're just buying and hoping that it's going to go up. You need a predetermined loss and a predetermined gain before you enter. So if you enter at a 2% clip, Jared just said $2,000 account. 2% of 2,000 is $40. So I would tell Jared, don't risk more than $40 of your own capital per trade and try to get at least a 3-to-1 risk to reward ratio. So 3 times 40 is $120. So Jared, I would say Jared on a $2,000 account, risk $40 max. Now he could do less. 3-to-1 on a risk to reward. He could get more. But those are some of the parameters. I don't want to go too far into that. That's helping you know the predetermined loss and helping you do more with less is about leverage. Also, it's not all about stocks. I'm going to talk about Forex. I'm going to talk about options. I'm going to talk about futures. I'm going to talk about cryptos. I'm going to talk about, long-term trading versus short-term trading. And most importantly, how professionals trade. We will offer some sort of promo. We have gone up in our pricing recently. So for those members that are already members, they're grandfathered into that, okay? But, the longer if this is something you want to join, go to TradePhantoms.com and you can go look at some of the membership programs. It's like having a gym membership. It's cost effective, all right? So that's the last thing I'll say about that. Now I'm going to go back to my man Jared and get a little advanced. Jared, what I would say to you is this, my friend. Let's take the trade as if we were really going to take it, though, all right? Now that we covered the beginner stuff, okay? You there, Jared? Give me a yes. Because if I go through this, I think I'm going to take this trade, Jared. So if I go through this, I want to make sure you're in the room still. Willison, I know it takes a lot of time. Louis. All right. I'm going to take this trade, guys. So for those of you that are newer, sit back, chill out, relax. Let me do my thing. Let me get advanced for a second. I got a little FOMO here, guys, about missing out. Nah, you know what? We're gonna have look at guys. You know what we're gonna have to do? We're gonna have to play weekly demand because we already missed an entry. We already missed an entry. Yeah, we're gonna have to go weekly demand. And on the daily, you got a rally-based rally. All right, so here's what I'm going to do. Set up a longer-term trade. I'm going to buy at the penny. And I'm going to set my stop loss right there. So look it, I'm covering 2 levels and I'm going to front run the penny. I'm going to buy at 179.05, drop base rally. I'm going to set my stop at 178.15. That covers that rally base, that covers this demand level, and it covers the sweet spot. And it covers the bumper. Louis, you tracking, guys? This is a sweet little level. This is a sweet little level. Now, Jared, I'm going to place the trade with you and show you. So I'm going to answer your question 100%. So I'm going to come over here. I'm going to hit the plus button. I'm going to hit create new order. Now, let's just say hypothetically, okay? It's Jared, if you're following the 2% rule, it never should, brother. It never should. That means you're not using proper risk management. So let me show you. All right? I trade in this account. You guys that know me know that I trade with 7 digits. I trade with a million. This account I trade with 100,000. Okay, so I'm gonna do this off of a $100,000 account, but I'm gonna answer Jared's question first on a $200 account. All right, sell or buy. We know we're gonna buy. We know we're gonna limit. So I'm gonna go to limit right there. Jared, skip over units. Units is last thing you're gonna do. You're going to go first to your area that you're going to buy in. What did I say? 190.05? Oh, what was it? I got bad fucking eyes. 179.05. 179.05. All right. That's my entry. 170.09 is my entry. My expiration is going to be no expiration. My target, I forgot to do my target. Let me come back. So this is gonna probably be a little. We're gonna have to trade up here. We're gonna have to go a little bit above all-time highs. No, I'm not all-time highs. Recent highs. I'm sorry. I take that back. Sorry, guys. Sorry, I'm getting derailed here. I should have realized that before I went into that. I got excited because I do like this trade. Even Mr. Green gets excited sometimes. So this is a good trade. Ah, you mother. If I swear, somebody will probably report me, so I didn't swear. Snitches get stitches. All right. Okay, so what's realistic? Let's go to the quarter. Let's go to the quarter. Let's go 82.45. Yeah, let's go to the quarter. Let's go quarter. Let's jump the dime. Go to the quarter. All right. Let's get back down to the 4 hour. Let's go back down to the 4 hour now. All right, there we go. So there we go. Blue line, these three lines. Entry, stop, target. Here we go. Let's try it again. Plus sign, create new order, buy, limit, skip over units, expiration, always no expiration. Okay. 1.7905 is my entry. My stop loss is 17815. 1.7815. That's 90 pips. My target is 1.82 for 18245. All right. Now, Jared, it's about a 3.5 to 1. If you're trading, Jared, with a $2,000 account, okay, the most you can risk is $40. So let's just say you're going to do 2% and you're going to do $40. All you do is you punch in the units available. Okay? Now, with that being said, let's just try 10,000 units. What did 10,000 units just do? I know it might be tough. Let me see if I can scroll in here a little bit. Look at that risk right there, Jared. $66.64. If you took that trade, Jared, you are breaking your rules. Your max limit is $40. So we got to lower 10,000. Let's try 7,500. $49.98. You're still breaking your rules. Let's try 5,000. $33.32. Okay, we can go up a little. Let's try 52.50. $34.98. Let's try 57.50. 38. Let's try 6,000. $39.98. 6,000 is $39.98. Jared, here's my point. You should never have an issue if you're following the 2% rule. Ever. No, 6,000 is good. $39.98. $39.98. Jared, does that make sense, man? To me, it just tells me you're risking too much. That's what that's telling me. Now, I got to place my trade, which I'm going to risk 2,000. So let me show you how fun this is. So let's just try to do the math. If I just did 5,000 units, okay, if I just did 5,000 units, I'm trying to think, $40. What's 50 times 40 is 2,000. 50 times 5,000. Let's see, am I going to be right? Is it going to be 250,000 units? If I did that, I'm pretty good. Oh! No, 1665. I fucked it up. It's 300,000 units for me. So if I go 300,000 units, I'm risking $19.98 with a $7,500 return. I'm going to hit submit. That trade is placed. I will update my TradePhantoms pick sheet For those of you that are not Trade Phantoms, we have something called the Trade Phantoms pick sheet. I will update that afterwards. For those of you that are Trade Phantoms, I am legitimately taking this trade. This is a nice little pullback. Supply and demand, we'll leave it open. It's a cross pair. This is exactly, those of you that were just in the numbers game class, this is exactly the type of stuff I'm looking for. Okay? All right, last thing I'm going to do to close up. All right? Last thing. Well, thanks for giving me the answer, Possum Foot, after I already got it. But yes, sir. I'll update the sheet in a second. I'm going to wrap up this right now. YouTube. So we got ourselves another trade. All right, which is good. Last but not least, those of you that are still not members and want to be members, just come to www.tradephantoms.com and sign up for the class. It's this Thursday, the complimentary class. I will be teaching it. It will give you the opportunity to see what we do, for what we do and for how we do it. Okay. Class about 90 minutes long. Yeah, Jared. Your mistake. Your mistake. Your mistake. I don't. This is a Forex class, but I'll do a gauge. This ain't futures, but I'll do it. I'll be honest with you, Gage. I don't like how you demanded it. Go over. I mean, like, what am I, like, your trade dummy? Like, how about can you go over? This is where I get off with people. Go over crude oil. And even though you put the question mark at the end, I don't like it. I don't work for you. Yeah, it's not Mr. Black. You're right. That's the last thing I'll do, Gage. I got you. I was in class. It's just how you got to be careful in a time with you got to be careful in a time with texting, email, because you probably meant nothing by it, but it's how it comes across. Fuck you, Eric. Fuck you, Eric. He knows I'm messing with him. All right, so last thing, sign up for the class. We'd love to see you at the free class. If you continue on with Trade Phantoms Pro, memberships are like monthly memberships, et cetera, et cetera. Not that bad. No Tesla, man. I will do crude. I said I would do crude. So here we go. It's not going to trigger anyway. Whoa. That's why he asked me to do crude. Crude's on a tear, man. So, Gage, I'm still going to go monthly, weekly, daily. So I'm going to do my range for my IOF. I'll tell you, it's in monthly demand, Gauge. It just poked it though. Look, that's a wick. So I would still go high. I would still start high and go low. Just like I would on oh, my Fibonacci is not right here on TradingView. That's all right. We don't need it. So, Gage, look at price already popped off this demand level over here. Scroll to the left. So if you look down here, I'm on a weekly right now. Price just banged, so yeah, it just banged that right. It banged that demand level. So if you want, Gage, I would tell you this. You got a pullback. I would be short on oil, but I would even say you're late on being short because there was a massive pullback in oil. So you're kind of low in the range. You're kind of middle to low in the range with a severe downtrend. But I would feel you kind of missed it. I mean, if you're trying to day trade it, if you're trying to just throw in a little trade, there's got to be a reason why oil's moving this much right now. That's a big move. What happened? Look at now you got me invested in something I don't give a fuck about or can't make any money off of. What happened with oil? Is it geopolitical? Is it this Israeli military is now targeting Beirut? Is that what's causing oil to do this? Probably. Gold, meanwhile, is not ignoring the risk. Gold is currently at 850 or 33% into the high price. So what is gold doing? Are all assets down? Yeah. So I just gave you an answer. That to me, and the dollar's probably up a little bit. No, dollar's down. So IOF, I would, so to clarify everything for you, IOF, I would short it, my friend. But I wouldn't market short it. You're going to have to wait for a pullback. All right? But that move right there, that's got nothing to do with IOF, man. There's other factors out there. That's geopolitical fundamentals. That's why that moved like that. Is definitely why. Because look at it, didn't hit a level, it didn't hit anything. Does that make sense, man? It's a good bring up. All right. Guys, I'm out. As I said before, those of you that just hopped on maybe late, I'd love to see you Thursday night at the class. Check it out. The first one's free. If you decide to sign up, it's $100 and some change a month for a membership. You can go to the website, www.TradePhantoms.com. Check it out. Check out the free class first. Love to have you. Other than that, I will be back on YouTube Wednesday. All right. I'm not... yeah, okay. I got you. Yeah, I'll see you guys later on. Take it easy.